Back. Disney shares, they're lower ahead of earnings after the bell, down about 4% in a month. Jenny, you own it. Doc, you are long Disney calls going into the print. So, Dr. J, I start with you.
All right, Scott. Well, this is like that movie, Honey, I Shrunk the Kids, except they shrunk the vol, meaning the volatility. It has been coming down fast, Scott. For instance, in February quarter, it was around 40. It fell to 30 for the next earnings cycle, and it's lower than that now. Just this week, the straddle has already shrunk by better than $1, which means that people are not really thinking that Disney's going to make much of a move. Me being a contrarian, I think perhaps they're pricing it too cheaply. And so I think that they might actually have some positives to say. So I'm comfortable holding those calls. We'll see whether or not they go to toast tomorrow, Scott. But I think this one could zoom to the upside.
All right, Jenny, now what are your thoughts here, right? A great run and then a bit of a stall. Obviously, the Delta variant's on a lot of people's minds. But Daniel Loeb, hang on. Coming to you just a second. Just want to finish. Daniel Loeb of Third Point, in his most recent investor letter, okay, and he has made the argument from the get-go of their investment that Disney needed to go all in, those are my words, not his, on Disney Plus and streaming. And he takes it a step further in his most recent letter, and I want your reaction to it. He says his basic gist is they need to do even more than what they've done if they want to continue to see the share price escalate and the company really reach the potential that it can. He says, we continue to believe that the best way to capitalize on this strength to maximize future earnings potential globally is by providing an all-you-can-eat direct-to-consumer offering on a single platform under the Disney Plus brand, where all theatrical content is available day-to-date with no additional fee to subscribers. He's talking about things like sports and general entertainment and blockbuster feature movies, all under one all-you-can-eat thing. Is that strategy the right way for Disney to go?
I don't know. I'm not the CEO of Disney. Dan Loeb's a really smart guy. He's also an activist, and he takes a very different approach to investing and working with management than I do. So he's telling them, here's what I think. I'm going to tell you, Dan's smart. He may very well be right. From my perspective as an investor, here's what I think. Management probably knows what's best. Bob Chapek is really smart. I'm going to trust him to do what's right. And so what I'm looking at is...
Come on now. Come on. Is he doing enough?
So.
Are you satisfied as an investor?
Yes.
Are you satisfied as an investor?
Because 100%. I bought it 1 year ago. Stock's up 50%, and we're continuing to hold it because we think that there's significant upside to come. But I don't know what's going to happen on this earnings call. I think the Delta variant is throwing a wrench into things. I'm not quite as positive as John. Hopefully he's right. If he's not, that doesn't affect my opinion. Because when we bought it last summer, our thesis was, and this remains intact, they will probably easily be able to get to $10 of earnings. If that's pushed back a little bit, because of the Delta variant spiking up more, and that happens in 2023 instead of 2022 like we originally expected, fine. Then I still have tremendous upside. This is a terrific company, and I trust the management to do it right. I suspect that, and all credit to Dan, but I suspect that the management knows more about how to run Disney well than Dan Loeb does. But he's smart. He might be giving them good advice. I'm not sure.
Okay.
Comfortable with my holding.